Mr. Hefele, after a horrendous 2022, the stock market has not progressed at all since. Were you hoping for and expecting more?
Well, hope is not an investment strategy, but I think as we look ahead, we see rates falling and inflation falling, and that's really what the driver is. So with that, we think that stocks can progress a fair bit in the next year, although our preferred asset class is bonds.
Stocks were regarded as without an alternative for a long time. Now bonds have become increasingly attractive due to higher interests. Will this continue in 2024 as well?
We think so, and we think this is a great time for investors who focus on asset allocation because they can earn returns on cash, on bonds, on equities, and also private markets if our base case scenario plays out next year.
Speaking of interests, the more they rise, the bigger the risk for certain companies and states. Which debtors do you consider at risk specifically?
Well, I think that we would have a preference for quality bonds overall, so less on the high yield side. When it comes to states, it's very difficult to say because a lot of these risks are non-linear because governments react in different ways to their debt load. So a lot of those start to become political questions. But of course, Switzerland and the Swiss franc are viewed as a safe haven around the world.
Let's talk about investing. Which sectors and regions look promising? Which ones would you recommend?
Well, we've recently upgraded U.S. technology into next year. We think that we have a focus on quality stocks next year because as growth slows, investors try to move to those companies that have very strong returns on capital, that have strong balance sheets, and able to deliver earnings despite that slower growth. A lot of tech companies fit into that bucket, but focus on quality in stocks and bonds would be our primary takeaway going into next year.
What about commodities and precious metals? Are they potentially a favorable addition to one's portfolio?
Well, gold has moved a lot. We think it might come down, but as you get further into the year, there is a chance for that safe haven status to pay off. And if rates do come down, if real rates were to come down, that can be attractive for gold. We think that the oil can be a real strong geopolitical hedge, and we see oil trading in the $90 to $100 a barrel range. But overall, our strategy would be to what we call play the range, which is maybe sell some of the upside, try to take advantage of things not moving a lot in next year.